Good afternoon, little brother.
Good afternoon, big brother.
We are the Stinemetz Brothers, and this is the Pseudo Scholars Podcast, where we believe science isn't just for scientists. We think that science is for anyone with integrity who honestly wants to know more about the world. Each week, we grapple with reality by challenging what we think we know about stuff.
Yeah, we like asking questions and diving into topics like, what's the latest in the gene editing world? Or is there validity to social scientists' research in, generational studies? Or what do we do with LeBron James's legacy after losing yet another NBA Finals? These are the kinds of questions and topics that we like to dive into. And then hopefully after we break them down, we leave a little more informed, stimulated, and inspired.
And we've been away from the podcast now for a couple weeks. I've been on the road traveling, but we're back today, Cade. We got new webcams. We are fired up because we're talking about cryptocurrency. You ready for this one?
Yeah, I'm ready for cryptocurrency. And there's a layer of reasons why I'm more excited about this podcast than anyone we've done so far, but I'm going to try to hold off until we get to the content.
All right, let's get there. So I am also thrilled to talk about cryptocurrency. Specifically, we're going to be talking about Bitcoin. We're going to be talking about Ethereum, and we're going to be explaining what the blockchain is. But these two currencies have absolutely exploded onto the mainstream. Bitcoin and Ethereum are now publicly outperforming any other stock in New York Stock Exchange history. I think Bitcoin, a single Bitcoin, is sitting around $2,500 right now, and an Ether, an Ethereum token, is sitting around $350. So personally, I've been involved in several fantastic businesses over the last about 15 months or so. But it's my Bitcoin and my Ethereum investments that are outperforming all of those in businesses by a long shot. I just want to tell the audience that I've actually made over 100,000 US dollars in the past 3 months solely on Bitcoin and Ethereum investments. So first off, I need to give a shout out to my super smart friends, Alvaro, who I just visited in Madrid, and Cedric in San Francisco. These are the guys who introduced me to this wonderful world of cryptocurrency. But I'm not talking about how much money I've made in the last 3 months as a way of being braggadocious. I just genuinely want people to become interested in this topic, and I want to bring it to everyone's attention. The power of cryptocurrency is real. Its potential to redefine money and the way we think about money is real.
Right. No, there's no doubt about that. And I like kind of the intro with the network of cryptocurrency fanatics that, brought you into this world, Shane. And that's the same way that I got into this world too, right? So we're really as strong as our best connections. And so that's what we're trying to do here is kind of, disperse this information and knowledge to a greater source of people so that everyone can learn about this new technology that we think is going to be really impactful, right? So Definitely. Just kind of want to zero in on some questions before we get into this so we can figure out what we're trying to accomplish, right? So we want to answer the following questions, right? We want to answer, how does money work and why are central banks and government currency flawed, right? Why would we want to change those? We want to say, what is the blockchain, Bitcoin, and Ethereum, and these buzzwords that Shane's talking about, maybe you've heard on, in some of the news lately. And then how can you get involved? How can you buy your first Bitcoin or Ethereum and become a participant in this, network of people that are enjoying the fruits of this unbelievable technology?
Awesome. So that's what we're going to get into today. But we do want to start at the beginning, as we always do with these podcasts, try to break things down and then rebuild them. So, Kate, I think we need to start with how money works. You're our resident economist. Can you try to help us explain how money works? Let's go through the history of this.
Yeah, so I'll give a quick definition, but also one thing to think about is just that money is a weird concept. Valuing things is a little bit strange. So it might not have been something that you've thought about before this, but if you bear with us through the foundation laying, I think that we'll be able to set up the foundation for why this technology is going to just kind of reinvent how we do this. But you got to remember that the way that the textbook definition for money is really anything that's commonly accepted by people in a group or a society that you can exchange goods and services on the basis of that value.
Right. And it's interesting to talk about the earliest forms of money. We know they were finite resources, things like shells, feathers, etc., that people traded. So people eventually just learned to organize themselves and agree upon a certain value for each one of these resources. A good example would be 10 whale's teeth equal 1 chicken. So if you go into the market and you need access to a chicken, you need to buy a chicken for food or for eggs, you could trade 10 whale's teeth. And this was the earliest form of money, and it was the first time that in human history, we took a stab at storing value. And that's a concept we're going to recover time and time again throughout this podcast. But it was highly practical, and it made a big transition out of the bartering era when we would have had to trade goats for chickens, for example. Now we learned to store up purchasing power. And that's a big deal. So you could store up tons of whale's teeth potentially to make big purchases later on in time. So it also just made a lot of sense because keeping chickens for a long time would be a total pain in the ass. And as we're talking about like distribution of capabilities and powers in society, now we only had to have one chicken farmer. Everybody else could store up their value in whale's teeth instead of storing up their value in these items that had to be bartered for. So basically, you can think of it as 100 whale's teeth being simpler, much easier to own than 10 chickens. Does that make sense, Cade?
Yeah, no, that makes sense. So what we're really going to see is that the history of money is all about solving practical issues, right? I can't exchange, I can't store. This is hard to transport. It's hard to divide up, right? And that's the reason that we have to do this. But, you know, it's pretty interesting to know that this is really intrinsic to human beings. Exchanging things for value. You don't have to teach a kid how to use currency for him to trade, you know, an extra sheet of notebook paper for the kid's eraser or something like that in school. Or, you know, I used to sell peanut butter and jelly sandwiches and get my mom to make a little bit extra because I knew they were a hot item come lunchtime and no one wanted to eat the cafeteria food. So it's just interesting to notice that that's really something that just happens naturally. And people have been doing this for generations and generations. And we're really just talking about like a practical evolution to how we do this.
Yeah, and the next step in the evolution was sorting out this problem of divisibility. Whale's teeth were not easily cut in half. We've already said that maybe 10 whale's teeth equal to chicken, but what if you only needed to buy something that was worth a quarter of a chicken or even a half of a single whale's teeth? A single whale's tooth was not simply divisible. So there were a lot of challenges with these finite resources. You know, think about shells washed up on a beach. We've all declared that this shell is worth a lot of money until all of a sudden a buttload of them wash up on a beach somewhere and the local villager who walks by the beach becomes the richest person in town. It doesn't seem just. It doesn't make a lot of sense. So we needed a better and more practical way to think about our currency. And it was actually kings, dictators, who were the first people to come up with a solution to that problem. And interestingly enough, it made them a lot richer in the process. But basically, kings started minting their own legal tender out of precious metals. And they would stamp their face on the coin, declaring that that specific coin was worth such and such amount in their respective region or government province.
Right. No, and that's a good point, because when you look at how currency works, there's always got to be something behind the currency, or there's always an attempt to have something behind the currency, some kind of underlying value. So when you were trading goats and chickens, they both had practical, you know, applications that someone would need, and that's why they became valuable. But what we saw is that it just didn't work practically to exchange over time. So you did see, like you said, the rise of people creating their own currencies. And you know, I kind of even think about why does those currencies become valuable? What makes those precious metals worthy of being exchanged? And it's really all about trust, right? And I know we're going to get into that a little bit, Shane, but I even think about the Bible story, and this has nothing to do with what the biblical point is, but you know, the guy comes up to Jesus and he says, should we pay taxes to Caesar? We're Jews, right? And Jesus says, well, bring me a denarius, bring me a unit of currency, and tell me whose face is on that. He says, well, Caesar's face is on it, right? So it's really Caesar, the symbol of authority in the society, that was able to ascribe value to these things, and trust in Caesar allowed for the exchange of all of this stuff. But anyways, the point is that there's always got to be something behind it. And that kind of takes us into what the U.S. government tried to do with that, Shane, which was all about.
Right. But we want to take a step back before we get to what the U.S. government did, Kate, because actually the next step in the lineage of currency was transitioning from these metal finite resources into paper, which were essentially like IOU or commitments to certain entities and organizations. But what paper allowed for was the ease of trade internationally. So Europeans want to move out east and trade along the Silk Road with the Chinese and the Japanese. We didn't have a defined currency internationally. So what did they do? They tied paper, which was much easier to carry aboard ship than bags and bags of metal. And then they tied it all to the gold standard, Cade. So basically, this was the first time where the value of money kind of throughout modern history was all associated with a single precious commodity that was finite in its amount. And that was the gold standard. But it wasn't until President Richard Nixon in 1971 before that transitioned. Can you tell us about that?
Well, yeah, so he abolished the gold standard, right, which was the attempt to tie this value to have something valuable behind it. Because, it's really interesting that you say that, because we talk about this precious commodity, but what we've really talked about is moving to a form of currency that is actually less practical as we evolve, right? We go from sheep that have real practicality to precious metals that only seemingly have, value, all the way to paper, which is almost valueless, right? And so the gold standard was the attempt of the US government to try to keep people buying into this value. And we really abolished that in 1971 with Richard Nixon. Think that you said that. And so really we kind of look at our currency today and say, what's behind this? What makes this valuable? And it's really all about that point that I talked about, is really trust in the federal government, that you have an authority that is controlling this value. And if all the people in the society agree, then we can do business that way, right? But really what we're talking about is fiat currency, Shane. And just to define that, fiat currency is just a fancy term for saying something is intrinsically valueless and isn't backed by a physical commodity. So that's the way that our currency works today. It is now a fiat currency. It's no longer backed by the gold standard. And so it's no longer backed by something that has intrinsic value. And it's basically, like you said, it's paper that our government tells us is legal tender, right? And they stamp their name on it, and they put a code on there, and all of a sudden it's unique and it becomes valuable. And again, it's based solely on faith and credit in our government and economy. But that, to me, just looking at that, doesn't seem like that's the best way to do things.
Definitely. And we've seen that there are major problems with not only fiat currency, but also modern banking. So we should talk about what the issues were, or the challenges that are currently existing with both fiat currency and modern banking. So to start with fiat currency, we've already said that you're placing all of your faith, all of your credit and confidence in an institution, a singular bank, a singular government. And the problem with banks and governments, as we know, Cade, throughout all of human history, is that inevitably they fail. There's no preventing it. You can delay it, but it will inevitably happen. Institutions fail. Other institutions come along that are better and succeed it. So some examples in current history would be the governments in Greece, governments in Venezuela, governments in Zimbabwe. Those are three countries that basically became insolvent. They couldn't handle their debt issues, and basically their currencies became totally inept and unusable, especially in Venezuela and Zimbabwe, which are now early countries that have adopted Bitcoin. But we'll get there. And even though those countries might seem a little bit far from home, we were talking about South America, we're talking about Africa, that's far away from our homes in San Francisco, California, right? Well, perhaps, but I think it's always worth remembering that the US government is approaching a $20 trillion debt status. And when we do achieve $20 trillion in debt, I think it's going to be a bit of a wake-up call to everyone, and a reminder that our government is also insolvent, Cade.
Yeah, people need to think about that. I mean, it's pretty crazy. You really hit on the key point, which is we feel pretty safe in this country. And relatively speaking, we are, right? We've got a much more stable democratic government than a lot of other countries in the world have. But it is something that's crazy to think about, that the Federal Reserve and a few people that are elected to office are making decisions about how this currency needs to change over time, and how to control interest rates and inflation and all this kind of other stuff. But they're like puppeteers, pulling strings behind the background. And all of a sudden we see that those strings have led us to $20 trillion, as you said, and it's really not going to get better. We don't have to get into Trump's policies to know that deficit is probably not going to shrink. And so all of a sudden you got to ask yourself, is there a practical issue that the federal government represents in terms of my value stored up in currency, staying the same or even increasing slightly over time? Is there a real issue going on there?
For sure. So that's the fiat currency itself. And I'm not aware of any currencies that are tied to governments anywhere in the world that are not fiat currencies. So as far as I know, every government currency that we might be interacting with, whether it's the yen, whether it's the won, whether it's the euro, whether it's the pound, I am pretty sure they are all fiat currencies. So somebody can fact check me. They're all based on government basically telling you the value of that currency, using supply and demand, of course, but they're not based off of a physical commodity. So that's issue number one. And then the issue number two that we're talking about today, Cade, is the issue with modern banking in general. And banking is generally quite expensive. If you think about it, people have to pay money to take out their own money from their banks. Generally speaking, if you were going to go and use an ATM, as I would today, sitting in Budapest, I'm going to have to pay a percentage to get my money out of the bank. That just sucks, flat out. It's frustrating that we are paying banks oftentimes to hold our money, and then we're also paying them to withdraw our money.
crazy. And again, we got to ask ourselves the question is this the best way to do it? Or what are the flaws, right? And I think that's really what we're trying to draw out. But I would probably help people understand that really the way that banks came about and the original purpose of a bank, I kind of think about like a Western movie where you kind of have the sleepy downtown street with the convenience store and the saloon, and then you got the guy on the bank that owns, or the guy on the corner that owns the bank. And the reason why you go and you keep your currency there, you keep your money there, is because he's got a vault and he's got some shotguns, right? He can physically protect your physical value from being exposed. And we don't do that anymore. We've moved into a digital world of exchanging value. And so it seems crazy to me to think that, well, I don't really need the government or the bank to protect my money anymore because it's not a physical commodity that's being stolen. So, what are their purposes? What are the services that the banks are still doing today that are valuable, or is there a better way to do it?
That's a very great point. Ultimately, that's what we're paying banks for still, Cade. We're paying them for security in the way that we store our personal finances, because we don't want to put it under a mattress and we don't want to follow some of these other potential solutions. So we give it to a bank and we pay that bank every time we want to make a transaction. It sucks that I would have to pay a bank a percentage of $100 if I wanted to transfer $100 to you right now. We live in different countries. It would take a pretty long time in order for that transfer to happen, and we'd have to pay for some person in the middle to basically counteract that transaction. In order for me to exchange $100 with you, it's going to cost me some money because I'm paying that bank to secure my funds. So it's a pretty frustrating thing. It's just in generally frustrating that it's not a free service and that it's not a fast service, and that it's not even a secure service by some measures. We often hear about major corporations that are getting hacked and they're losing financial data. So I wouldn't even say that it's a totally secure option. But it makes me think, well, hold on, like we live in this era of the internet, this era of technology. Is there a technology that exists today that would be better than modern banking, that would be better than fiat currencies? And I think about the fact that we can send emails instantly, securely, and for free. That's information. We live in this era of the information era, as historians are calling it. But could we do the same thing with value? Could we exchange value instantly, securely, and freely over the internet?
Yeah,
now, I know, sorry, I just wanted to say that I know people might be thinking in their minds, as I even do, oh, PayPal, oh, Venmo, oh, TransferWise. There's other services, but all of those services are based on fees, and they're not always necessarily secure, but they're taking their cut every single time. So you're not actually deliberately sending your money for free to another individual instantly around the world. You're paying for somebody, some third party to do it. So we're looking for a better solution, Cade.
Yeah, no, and I think part of the point that we need to draw out is that obviously if I need to transfer money to someone, down the street, that's not going to cost me money and it can be done instantaneously. But as we move to a more globalized economy, more and more people are going to encounter the issues and the constraints that exist in the current system. And I can tell you, I just had an interaction with this because, our mom's dad passed away a few years ago, and they've just now gotten to distributing his will content, and we inherited a little bit of money, but his bank was in Canada. And you wouldn't believe the issues that I had with, they had to send a paper check. It took a week to get here. They sent it to the wrong address. I got to call them back. I want to just wire it, but they're going to charge me to wire it. They're going to charge me to exchange it to the current currency from, Canadian dollars to US dollars. And it was just an absolute pain. And then I have to pay to do this. Right. And this is just money my grandfather's trying to give to me. So there are some real practical issues with this in the time that it takes to do it. So again, all of these are the questions that we should be asking why. But the last point I want to make, Shane, on banks, that another practical issue is the fact that they fail. Right. We're not just talking about doing business on an ongoing basis and transacting. We're talking about the fact that banks have lost people money over time when their job is to do the very opposite, because they're risky, because they have human beings making decisions and they're flawed. And we really don't have to go too far back in history, less than a decade, to go back to the 2008 crisis and see where people were just siphoning value out of thin air. And then everyone wants to go and check on their 401k, and the stock market's crashed. And all of these, economic crises have risen, not only in the United States, but in the world, because of a few bad decisions made by these people. And there was really no guarantee that if I want to go get my cash out of the bank, they even have it at that point. So anyways, these are just the case against why financial services are just waiting for some kind of evolution. But Shane,
Wait, well, that's a great transition point, though. I'm sorry to jump on your case here, but just because you've brought up the fact that we were at this 2008 period where lots of people did lose their savings. I mean, people lost their entire Roth IRAs. Those were, that's a government-backed investment, and people lost all of it when the banks totally screwed us in 2008 with the mortgage loan crisis. It was also that time, not surprisingly, as we understand about human history, that progress was also made. And I think that's the transition to where we're going today, Cade. What happened in 2008 as well, besides the financial crisis?
Right. So I guess I couldn't say it any way better than this, but the internet nerds took a look at the problem, and once again, they tried to solve it. And they really looked at the two biggest problems that we're talking about, right? Just to restate them, governments who've created fiat currencies that are based on faith and trust they fail, and they're not always solvent. And then expensive banking services are a problem, and we don't need them anymore, right? And so the internet nerds put their computer science skills and their massive intellect to work, and they came up with something called the blockchain, and it's going to change the way that we do this forever.
That's right. I hope people are still with us through the history of money, and we've been on a little bit of a high horse, maybe a libertarian sounding high horse about our frustrations with banks. But stick with us now, because we're about to dive into this technology, the blockchain. But in 2008, Satoshi Nakamoto, which was the pseudonym for a series of computer scientists, most likely, probably not an individual, who created Bitcoin. So I'm going to start by trying my best to explain what Bitcoin is. And Cade and I should preface this by saying it's a very difficult topic. I just completed a 13-week Princeton course on the computer science behind the blockchain and cryptocurrencies, and I'm still by no means an expert. I'd say there are very few experts out in the world. If you listen to Tim Ferriss's podcast, he just did one a few weeks ago on cryptocurrency, and I couldn't make sense of it because I thought it was scattered and all over the place. But Cade and I are going to do our best to singularly explain what cryptocurrency is, what the blockchain is. So we're going to start with this one type of cryptocurrency that started it all. It's called Bitcoin. And Cade, it's essentially a digital currency that's intended to store its value. So in the same way that we talked about whale's teeth and the same way we talked about gold, so too is Bitcoin attempting to store its value, but it's doing it in a digital way, of course. And it's got these wonderful encryption techniques, which are really the mastery behind what's going on with Bitcoin and the blockchain. And this encryption technique has allowed the creators of Bitcoin to set a finite amount of Bitcoin to ever be produced in the world. So that's pretty cool. There's only ever going to be 21 million Bitcoins produced in the world ever as part of the original protocol set using some encryption techniques. If anybody's curious, there's about 15 million Bitcoin in circulation right now. So there's still about 6 million that's left to be minted. And by about 2025, the majority of Bitcoin will be in circulation, but it will continue to be produced until 2140. But incrementally, there'll be a lot less Bitcoin produced every year until we get to 2040, but that 2140. But that I want to talk about just the power of encryption and how that technique is allowing Bitcoin to do what it does. It basically allows for the performance and the verification of transfers. So you can send money and you can verify the sending of money, currency, stored value. You can do that independently. No central banks are required, and there's no middleman, no institution that's required. There's only one magical platform that's required in order for this to happen, and it's called the blockchain.
Yeah, so one point I just want to make, Shane, as people are trying to absorb all this, probably new information, is that when you think about the amount of Bitcoin being capped at 21 million, like you said, in 2140, maybe that sounds like an apparent issue, but really what you think about is that the amount of Bitcoin is going to become fixed at some point, but the value of Bitcoin can go on to whatever degree the market decides to value that Bitcoin. So it's really not a cap on value. It's just a cap on the units. And so that's something that should be exciting to people, because every single time the US government prints more dollars, our dollar is being affected by that and is going down in value. And so really it's kind of a brilliant approach of these computer scientists to put kind of a constraint within, the system.
Right. And so they use these encryption techniques and a protocol to set a finite amount that'll ever be produced. And that currency is called the Bitcoin. That's the currency. But the real magic behind it, as I said, is the blockchain. It's just very important that we draw out the fact that the blockchain is the network. It's the technology upon which all these other cryptocurrencies are being built on, Bitcoin being the first. So I think it's most important, Cade, for us to dive into what blockchain is. And one of the best descriptions I've ever heard of it is just Internet 2.0. And as complicated as it is to explain, ask any person who uses the internet on a daily basis to describe the internet. It's a very hard thing to conceptualize. Well, there's all these data servers and we're all connected somehow, we're wirelessly, and then there's this cloud and there's satellites. How all does it work exactly? Well, to some ways, I kind of liken the blockchain to an internet in the sense that it's an internet 2.0, but it's completely decentralized. So just as the internet allows you to send email to a friend in Japan instantly, the blockchain, this network, will allow you to exchange value with a total stranger in Japan. And that's where we need to unpack a little bit. Is it making sense?
Yeah, no, that makes sense. And because again, what we're trying to tee up is what are all the practical issues with the current system, and is there a technology out there that's going to do this better? So what I'm hearing now, Shane, is that we're saying we can replace central banks and government institutions that are tied to managing currency and things like that with this platform, with this technology called the blockchain, upon which we can then transact our currency being Bitcoin.
That's exactly right. I could think of it like a spider web. The actual computer science technology is called a Merkle tree. So for the visual learners, I recommend Googling the Merkle tree. It's part of the encryption technique that's utilized here. We're talking about military grade encryption that's never been hacked before, but we're talking about the spider web network that lets two individuals that are complete strangers interact. And some of the things they can do on that blockchain, they can exchange money or value. That's the Bitcoin. They could exchange data storage. As we know that data storage is often limited. Think about how often your iPhone goes off telling you that you're almost out of data storage. You could exchange data storage with a new cryptocurrency called Filecoin. And you could even set up perhaps the most powerful of all these transactions, smart contracts. And that's the cryptocurrency called Ethereum, which we'll get into a little bit more detail. But the idea is that strangers can now instantly, securely interact with no middleman. Normally you would have to pay for some kind of central service like a bank, like a government. You'd need an escrow service to validate both sides of the transaction in order to allow the transaction to go through securely. But with the blockchain, it's done instantly and it's done securely and it's done for practically nothing. It's almost free. We will talk about the value behind an exchange here in a second.
Yeah, and that should be music to our ears, right? All of the ways that it is going to innovate this kind of old space. But anyways, just to kind of give people a little bit more of a picture, if you imagine the blockchain, each block as just a ledger, right? And that ledger is created every single 10 minutes. A new ledger is created. And for 10 minutes, as people are making exchanges on the blockchain, on the network for Bitcoin, for Ethereum, for Filecoin, whatever units they're exchanging, it's recording those transactions, right? So pluses and minuses, debits and credits for all the accountants out there. That's what it's doing, right? And every transaction's recorded. It's completely public. That's what makes this so unbelievable. It's public, it's chronological, it's totally auditable. So every single block is connected to every single previous block that's ever been created. So you can see how money has changed and been exchanged over time. And of course, it's not just money, right? We're talking about all things of value, information, storage, all of those kinds of things, right? So the transparency is one of the critical components that's going to make this system work, because when we say that we don't have a guy in an office up in New York at a bank making sure things are right, we got to ask ourselves, who are the people that are going to enforce the laws? Who are the people that are going to manage this system? I know ethics is something that you're going to hit on a little bit, Shane, but the point is that this is totally transparent. So you and I can see what's going on. Everything's out there, and that's the step that this technology takes that's really innovative.
Yeah, you've said it before. I think you coined the term. I didn't hear it until you said it, but it's the total democratization of exchange. It's a new way of transacting in a totally democratic way where there are no single entities. And it's because it's done on this distributed network. So again, I recommend Googling pictures of what the blockchain kind of looks like so you can see what this network visually appears to be. But it's a place in which, while we're concerned about the fact that there are individual entities that could be corruptible, when we're talking about a distributed network, it prevents individual points of failure. So just like in a hierarchy at your corporation, if one single entity fails, potentially there's going to be a break in the chain, right? There'd no longer be a connection between the boss and the single levels employees if the manager got removed. There would be a legitimate break in the chain. The way that a spider web works, the way that the blockchain works, if one entity fails, all other entities around it essentially protect it from failing or from the networks not being able to continue to work. So that's an idea that I'm trying to get across, that single entities are the problem here. But we don't have that problem with the blockchain. That's the solution. It's called this distributed consensus protocol, in which all of us that are participating have agreed on a series of protocols. And there's a lot of rules and regulations that are in place to prevent us from cheating the system. No single entities can really cheat the system, can really hack the system, because we're all in agreement on how it needs to work. And whenever we see misuse of the blockchain, the network effect eventually will stop that and will prevent it from pervasively exploiting itself throughout the rest of the network.
Yeah, no, all I hear, and I think that other people need to be hearing, even if you're not going to, dig into the computer science and the code behind it all, is it's diversifying risk. That's what it's doing. It's distributing it out to several more points of contact so that you and I aren't dependent on some guy up at Lehman Brothers Bank in New York City doing the right thing. Right? Because we've seen that system fail. And so it's really, philosophical as much as it is technological in terms of how it's trying to change this landscape.
Right. And it gives us this peer-to-peer structure. It's the power that we remember, millennials will remember from Kazaa, the music downloading network, or LimeWire, where you could download and share these files from peer-to-peer directly with anybody in between. We're talking about doing the exact same thing here. So let's try to take a mental picture for a second. Imagine that I receive a Bitcoin from Chelsea, and I want to pay that Bitcoin forward to Cade. In order for that to happen, I'm going to broadcast the transaction that I want to pay 1 Bitcoin to Cade. And I'm going to broadcast it across the entire public network. That's the blockchain. That's what Cade talked about in terms of transparency. It's going to go into a ledger on a little block, and it's going to be visible to everyone that I'm trying to pay a Bitcoin to Cade. Now, Cade, he's got essentially an email address. It's a series of alphanumeric letters that allows him to receive payments from the network. So I'm going to transact this Bitcoin into the network, and Cade's going to receive it at his individual public key. Think of it as like an email address, as I said. So that is called a hash. And basically the way of thinking about linking, or the way of thinking about a hash, is that it's the link. It's the thing that keeps a historical track of where a Bitcoin has been and where it's going to go. So now we have this lineage that links the Bitcoin from Chelsea and wherever she got it from, unless she mined it herself. We'll talk about mining in a second. But it's a historical record of where she got it from, how it's been sent to Shane, and now how it's been sent to Cade. And that inevitably provides more security and allows us to do business on a totally peer-to-peer basis with no middleman.
Right. So Shane, that's a great explanation. And I know that this is some really dense content, but we're getting closer to landing this plane before we get into the great question of how do you get involved. But the last kind of concept that we've really got to iron out is, well, what makes this work? Does the software work automatically? If so, can the software be hacked? What's the human and software, marriage that exists in this system that allows it to work? And you touched on it, right? It's called miners. So if there's no central bank and Bitcoin isn't in an office, the blockchain is in this company that resides in California, then who's going to do this, right? And this is another brilliant idea of these scientists, right? And it's basically called mining. And so what Bitcoin does is it incentivizes miners to facilitate the transactions. So when Shane's talking about a transaction going to the ledger on the block becomes locked. And then after the 10 minutes, the block is kind of set in stone until a miner goes out and solves this kind of complex mathematical equation. I'm not exactly sure what it is, but it takes a lot of computing power. And so you have whole organizations that all they're doing is mining, and they do it. Why? Because they're incentivized, and not because someone's going to distribute the wealth to them centrally, but because in the code, there is Bitcoin stored inside of that block that incentivizes them. It's like coins falling out at, Mario Kart, right? If I unlock this block, then all of a sudden I'm going to get credited with Bitcoin. And so they've created this other business. And the really brilliant part of this is that it's going to go on forever and ever. And Shane, you're going to explain a little bit about that. But basically, we're going to have a new business called mining that's going to, bring competition and lots of different companies that are going to find better ways to do this, which should only make the network work a lot safer and a lot faster.
Yeah, exactly. And actually, I'm gonna elect not to go into more detail on how mining works. I think we've done a decent job explaining what blockchain is, what these cryptocurrencies are about, at least at a high level. That's the technology there that's got lots more to explore. I highly encourage people to go and learn more by watching videos, looking at some of the TED Talks that are available on YouTube, and going even deeper. If you want to get involved, you could take the Princeton course for 13 weeks as I did and become a bit more of an expert on the subject. But Cade, what we have been trying to do is talk about the ideological factors at play here, the philosophical reasons to be involved with these technologies outside of the fact that we've both made quite a bit of money on these technologies. So why should people get involved? Why do you and I love cryptocurrency so much? I do still think it's because I have this innate belief that institutions are corruptible and likely to fail. And for me, it's really not a matter of if this is going to happen. It's really a matter of when is it going to happen, and when it happens, what solutions are we going to have to store our value as those hard workers out there who are bleeding and sweating and crying over our hard-earned dollars or Bitcoin or whatever it is that we're using to hold and store our value. What are we going to do when large institutions fail us again?
Right. No, I think that's it, right? This is either practical and sounds realistic to you, or it doesn't. And we can really look back at history. We don't have to ask if, but we can ask when the system is going to break down again. But Shane, also, another just practical point, the systems and the software that are used on Wall Street were built in the 1970s. I mean, they're way behind in this space. It's not what they do, right? And what we're really seeing is another technology company similar to Amazon and Tesla coming into this kind of old, dusty industry or part of the business world and saying we've got a better way to do this. And that's really the pattern that we're seeing happen in all these, in automobiles and retail and now in financial services. So you got to ask yourself the question, have I experienced kind of some of these pain points? Do I want to pay cash to get cash out of my ATM? Do I want to pay to exchange my money? Or has software already offered us a better way to do that, and someone is just making the application called Bitcoin realistic and applicable and accessible to the world?
Right. I'd like to quote my friend Cedric again, the San Francisco Bitcoin guy who's now really an expert. He's been living on Bitcoin for a number of years now. He's got a great YouTube channel. If you look up Cedric Dahl, D-A-H-L, he's got nice explanations of some of this stuff if you want to go a little deeper. But Cedric, I remember him telling me when he was first telling me about cryptocurrency, and it really resonated with me. He asked me this question: what has the internet eaten so far in terms of industry? And Cade, you and I have explored this to death on the Pseudo Scholars podcast. That's one of the things we're most interested in: technological advancement, scientific advancement. And as far as I can see in my lifetime, no other technology has been as disruptive. Nothing has eaten other industries at the same rate that the internet has eaten industries. And as you just said, if the financial industries are built on technologies from the 1970s that require us to put our faith and trust in institutions that inevitably fail, why and when will a new technology come about that can change the game for everyone? When will the internet eat banking? When will the internet eat piggy banks, or the way that we keep and hold our money? I think that's what Bitcoin could potentially be in the long term. It could be the place that we hold on to our money. Ethereum could be the way that we interact and exchange and do business deals. It's a social contract. Cade, I know you've been in the Ethereum world for a little bit, so why don't we just kind of quickly break down what these technologies do? You've been in the Ethereum space as an investor. I know you're also in Bitcoin too, but Ethereum was your initial go-to. Why did you believe so deeply or inherently in what Ethereum does?
Yeah, so essentially, just to touch on it a little bit, Ethereum was invented by a guy named Vital. He was a Russian 19-year-old computer scientist who was a former Bitcoin programmer. And basically, I think Vital was trying to explain that he saw a bigger application world. He saw a better way to write the code to make it accessible to more companies so that they could basically create a platform as opposed to just utilizing a more specific type of application like Bitcoin. And so that's what he's done with these smart contracts. And so I basically see Vital as the mind behind the Apple App Store, and now I can unlock the innovative power of the world to come and say, you've got this unbelievable iOS operating system. I know how to build an app that helps me manage my money, or helps me know which groceries to buy, or helps me know what time I need to leave for work in the morning. And so that's kind of the platform potential that I see behind Ethereum, where he's really saying there's nothing that we do that there's not an application for blockchain to improve. And so it's kind of that creative potential that got me excited, whereas Bitcoin's a little more specific in its scope, and Ethereum just being kind of second player to the market. We've always known, kind of with the MySpace, Facebook, a lot of times that tends to be someone that can learn from the mistakes earlier on and make sure that they're more scalable than some of these other guys.
Definitely. And so your boy Vital, first name Vitalik, the crazy Russian who's like 21 years old now, he's had meetings with Vladimir Putin. He's had meetings with the CEO of Intel, major leaders at JP Morgan, who are all interested in now building on his platform. But what his platform does is it allows two entities to create a social contract between each other. So a little different than Bitcoin, where we're talking about a digital currency, hopefully a digital gold for those of us who are invested in it long term. Whereas Ethereum is about social contracts. And one of the really great applications that's been built on the platform now is one called Grand Bazaar. I have no idea if they're having success, but I love the idea because you know what they do, Cade? They are an e-commerce exchange entity. So they allow people to buy and sell goods on their website without a middleman. So they've just built the technology. They've done it because they believe in the technology. So I could put some products online for sale and charge whatever rate I want to charge, and any person can come on there and pay that rate instantly, and there's no person in the middle, Amazon, who's going to take a massive, hefty cut. So that's one example of a social contract and how it allows a technology to service as the middle person between two entities. Really cool. Definitely worth checking out if people are interested in that technology. So just personally, the way I've been instructed and the way that I've really learned over time now is that while a lot of mainstreamers try to make Bitcoin and Ethereum out to be competitors, they do different things. Ethereum is all based off of these tokens called Ether. So when Cade goes out and buys these tokens, they're called Ether. He uses those, or those tokens are then used by developers to power the platform, to build the platform. They're almost like buying fuel at a fuel station. And now I have the fuel that I need to power my car. Now I have the fuel that I need to power a new technology. It's a little different than Bitcoin, which is like investing in gold to some degree.
Yeah, no, I mean, and don't take our word for it. This is a really abstract, new age type of thing, right? When someone said, hey, I'm going to put all the computing power that IBM has onto a little phone and I'm going to put it in your pocket, no one really understood what that meant. And I kind of liken all new technological advances to that kind of just timidity in the market and a little bit of just kind of discomfort when you're thinking about this and how's it going to work and is it safe and all that kind of stuff. And basically all I can leave you with is the blockchain has never been hacked. Exchanges have been hacked. So the platforms that are allowing people to exchange dollars for these currencies, those have been, compromised, but not the blockchain itself. So you kind of got to go out and read some of this stuff and dig for context, because a lot of the mainstreamers are not going to want this kind of information to get out because it's new and it's going to disrupt some really old, powerful political, lots of dirty money involved in the financial systems industry. So you kind of got to just go out and dig for yourself and say, does this solve the problems that Shane and Kate are talking about? Are they even problems that exist, right? Maybe people don't even agree with us on that point. But hopefully you see that this really, really complex application has something so simple and powerful to offer to the world. And that's the concept that makes it, investable for me and, certain that it is going to become mainstream over time.
Great. I think we've done our evangelizing for the day. So if people are interested, Kate, I think we've explained why we are involved in these currencies and how those currencies have benefited us, not only financially, but also from an ideological position, because now we have these currencies that we can use to exchange where the government doesn't have to be involved in. Outside of that side, how do people get involved? How did you get started?
Right. Well, so I talked to the people that I knew about, right? I looked at my network and said, who knows about this stuff and how do I learn? We obviously already have the internet, which is the best way to exchange information. So you can read and watch videos to your heart's content. But it's time to start looking potentially, if you're ready to exchange, at some of these exchanges. And one that I would, I guess basically say that has been helpful for me is Coinbase.com. It's really, really safe. They've got a two-part, authentication system. And so I feel fairly safe in terms of how they, do their internet security. But then it's a really easy platform to look at these trends, to look at how these markets have changed over time, and then ultimately to do exchanges and store my value. But I know that you look at some other platforms, right?
Yeah, there's another one called Kraken. I've had trouble with Coinbase on customer support. They're just a little bit slow and they're a little backed up because the mainstream has really got involved with this technology. So generally speaking, most mainstreamers who are looking to buy and sell Bitcoin or Ethereum or this other cryptocurrency called Litecoin, those are the three that are stored on Coinbase. You can go to Coinbase, you can create an account, and you can buy a Bitcoin in less than a minute or so. It's really quick. It's really easy. I'm just gonna let people know that customer support is a little slow over there. It's pretty bad actually overall. So there's another exchange called Kraken, Kraken. That one's worth checking out. There's Bitfinex, and there's several others. It's worth doing your own research on, but obviously Coinbase being the place to start, it's the easiest, I'd say, if you wanted to get in and start exchanging Bitcoin or Ethereum. But there are lots of other altcoin cades. And when we say altcoin, we're just talking about alternative coins to Bitcoin, basically. So everything that's not Bitcoin now has this name of an altcoin. And it's a hard market to understand because there's so many of them. They're really taking advantage of interest right now in the sense that people are doing these initial coin offerings. It's kind of like an IPO, an initial public offering. We call these ICOs in the cryptocurrency world. It's an initial coin offering. And technologists are launching these babies left and right, saying they can do all these wonderful things. Many of them haven't actually practically displayed what they say they're going to be able to do. So I'm a little hesitant. I'm a little bit sheepish in getting involved on some of those altcoins. Not everyone's that way. There's some that are doing really interesting things. Like I think it's Gnosis that's doing predictive markets. So it could potentially be better at predicting markets and really anything that you wanted to predict than statistical, like normal odds that we're used to. It's a way of getting everybody in a blockchain involved in predicting the outcome of any said event. So it could be a really powerful tool. I love that one. In ideology, I just haven't seen the technology on display yet, so I'm avoiding it for now. But there's several of these altcoins, Cade. And if people are interested, Cade and I would be happy to do another podcast on these things. We have more knowledge, but today we tried to stay high level.
Yeah, and disclaimer, we are not financial advisors. This is a new space. Who knows what happens with new technologies? That's kind of the exciting part, is that it's really hard to predict. We've both over doubled our money. Shane's probably tripled his by this point, maybe even more than that.
Yeah, more than that actually.
But the point is just that obviously don't go and put in money that you're not willing to lose, and be a wise steward and do your research. But we do think that this is something that we've really experienced a lot of growth from, and a lot of returns that is worth at least looking into. As we've said, it has all this massive potential. Don't take our word for it. Go and check it out yourself.
Yeah, and one of the coolest things about it is the minute you buy a Bitcoin, or a percentage of a Bitcoin, because a Bitcoin is $2,500. By no means do you have to go and buy a full Bitcoin right now. You can go in and buy a very small percentage of a Bitcoin, $100 worth of a Bitcoin, if you wanted to get involved. That's a great place to start, because I do believe that Bitcoin and Ethereum have the potential, Ethereum to go into the thousands, Bitcoin potentially to go to the tens of thousands. There's all sorts of speculation, so check it out. But there's a long future there. And when you do want to get involved, it's so freaking cool, because the second you do get involved, you are now a member of that blockchain. You're now a member of that community. It feels like you're a part of this new technology that could take on the banking systems, that could take on fiat currency as we understand it, and could, in my opinion, change the way that we exchange value and do business forever.
Yeah, no, well said. I don't think I've got anything left to say on that one.
All right. Well, kid, let's close it out for today. It's been a fun podcast. I love this topic. If people are interested in hearing more from us on this topic, it'd be helpful if they just reached out to us in the comments on YouTube, or, hit us up by email, Facebook, whatever you want to say to us. It helps us understand what people want to talk about. But Cade, we will be back with a new episode of Pseudo Scholars next week. Unless you have anything else, that's all I got, little brother.
Nope. Have a good one.